Hello everyone, welcome back to Financial Impulse. In this video we will discuss about dividend stocks. So many people like to use dividend as a passive source of income, okay, or you can call it an additional source of income. And there are many stocks which pays a lot of dividends, okay, starting from 4% dividend yield up to 25%. So which one should you pick? Should you pick the one with the highest dividend yield, or you should consider some other factors as well? In today's video we will discuss all of those things, and I will give you the top 3 dividend stocks which I think is worth investing and which has a good future. So I will first discuss the criterias why I have chosen those 3, and then also I will do the price action analysis of those stocks and tell you the proper entry points. Okay, so let's get started. Please watch the video till the end because this is a very informative video and you can get a lot of benefit. Okay, so let's get started. Okay, so this is a list of all the dividend stocks which I have chosen. Okay, so let me show you the dividend yields of all these companies. Let me sort it by descending order. So the one with the highest dividend yield will be shown first. Okay, there it is. So you can see at the top we have Vedanta, okay, with a dividend yield of 25.78%, followed by Hindustan Zinc by 15%, then Cetronix with 14.79%, NMDC by 12.15%, and so on. So should you invest directly in Vedanta all the money that you want to put in a dividend stock? The answer is clearly no, because there are other factors which we should definitely consider. Okay, so let me tell you the ones which I have chosen, and comparing with that I will tell you why I will not recommend investing in stocks like Vedanta with extremely high dividend yield. Okay, so first of all, the first stock that I have chosen is Coal India. Okay, Coal India is a stock that I have chosen. This is my first stock. Let me first discuss why I have chosen it. Okay, so first of all, coming to Coal India, you can see the current price is 215 with a market cap of big market cap of around 1,32,000 crore, and it has a huge reserve of 50,200, and the debt is very small in comparison to the reserve. Okay, just 3,109 crore. Okay, but if you compare it with Vedanta, you will see that it has a lot of debt, 59,000, almost 59,000, which is a big debt. And if you are investing in a dividend company, then first thing that you want is that the company will remain profitable, or it will run for a longer time, right? So that it will keep paying you the dividends year on year, right? So if it has a lot of debt, then we do not know if something bad happens with the company tomorrow, then and it is not able to pay the debt, then there are many factors which can affect the performance of the company, and it might stop paying dividend, or it might shut down, or it will be sold to another company, and so many things. Okay, so that's why we should check these things first. Okay, the debt should be low. Then the debt to equity ratio is 0.07, okay, which is extremely good for Coal India, whereas it is 1.09 for Vedanta. Okay, so that is another factor we are considering. Now coming to interest coverage ratio, you can see Vedanta has 5.42, which is not that bad, but still in comparison to Coal India, which is giving 66. Okay, so this is a lot better. Okay, why would you prefer for a company which has low interest coverage ratio? So that is another factor. Now coming to return on asset, this is good for Coal India. Okay, current ratio and quick ratio is also much better in Coal India in comparison to Vedanta. Okay, now coming to the other factors, so you can see that the promoter holding is 66. It is almost similar for both. Okay, so no point of comparison here. But another weak factor which is clearly visible is, you can see in Vedanta the pledging percentage is 99.99%. okay, so almost all of its shares have been placed. But in comparison, Coal India has 0.00, that means 0% share is placed, which is another big factor which affects the future of the company. and the dividend yield is 25.78 for Vedanta, but it is 9.39 for Coal India. But 9.39 is still a very good dividend yield. Okay, it is much better than the fixed deposit that you make, okay, in the bank. And the next factor is the dividend payout. It is 60.36%. So although it is little bit higher, and growth companies do not have that much of dividend payout ratio, but we are considering dividend company, so 60% dividend payout ratio is fine, not a problem. Anything above 65 will be a problem, but here you can see the dividend payout ratio is 89%. So it is giving maximum percentage of the profit in dividend form, okay, and the pledging is almost 100%. So these are the factors for which I do not recommend Vedanta. I would choose Coal India instead, okay. So the first stock is Coal India. Now the second stock, the second dividend stock that I have chosen, that is NMDC. Okay, now let's do the comparison. The current price is 121, market cap is 35,500 crore, reserves is 19,000 crore, and the debt is also small, just 2,200 crores, and that's why the debt to equity ratio is also very good, 0.11%. okay, interest coverage ratio is 129, which is excellent. Return on asset, return on equity is 23 and 29 as well, which is again excellent. And if you see the current and quick ratio, these are also excellent figures, 3.31 and 2.29, right. Now coming to the other factors, the promoter holding is 60.79%, pledging is again 0%, and the dividend yield is 12.15%, which is excellent. Okay, it is almost equal to the index funds, okay, the Nifty index funds, and much greater than the fixed deposit with the bank, okay. And the dividend payout ratio is 45.96, which is another good factor. So it is much less than 60%. It is better than Coal India also, right. So this is the second stock that I have chosen. Now coming to the third one, the third stock for dividend yield is National Aluminium, okay, NALCO. So the current price is 78, market cap is 14,300 crore, the reserves is 12,000 crore, and a very negligible debt of 125 crore. That's why the debt to equity ratio is 0.01, okay, which is excellent. And coming to the interest coverage ratio, it is 128. As you can see, this is you can compare it with this row, okay. The return on asset is 18.45, again excellent. Return on equity is 25. Current ratio is more than 2, quick ratio is 1.47. Everything looks good, okay. Now coming to the other factors, promoter holding is above 50%, again it's a good factor. No pledging at all, and the dividend yield is 8.31, okay, which is also good, much greater than the fixed deposit in returns, okay. And the dividend payout ratio is 40.44, okay, which is another good factor, right. So these are the three stocks. So if you have watched the video so far, please hit the like button and subscribe to Financial Impulse if you find value in these videos, and you can check out my other playlist as well, okay. Now coming back to the topic, so these are the three stocks: Coal India, NMDC, and National Aluminium, okay, NALCO. Now we'll do the technical price action analysis, and I'll tell you the buy points, okay. First of all, let's go to Coal India. So this is the weekly chart of Coal India, and current price is 216, okay. So let's see if there is support of any moving average here, okay. We can see the support of 50 weeks moving average in this weekly time frame. So currently it is a good time to buy the stock. There is no issue at all, okay. The price might drop little bit, but it's okay because you are buying it for the dividend. So you want to capture the stock at a lower price. So even if it drops little bit to 190 or some place like that, you can buy even more, okay. So you can invest some amount right now in Coal India. There is no problem at all. This is a good buying point, okay. Now coming to the second one, that is NMDC. So NMDC is showing some weak price action as it comes closer to this resistance level 138, okay. So it might show a price action like this in coming days. So in order to confirm that, let's go to the daily time frame little bit. Okay, yes, you can see some weak price action here. So now is not the right time to invest in NMDC. It might show a move like this and then start dropping. Okay, and once it does that, then only we can see the buying areas where people are interested to buy with huge volumes. When we see huge volumes, you can buy, and most probably it could be this level, either this one 104 or 96. These are the levels of buying. So as of now, you can focus on Coal India and accumulate some of the stocks of Coal India and leave NMDC for the moment. Okay, now let's go to the other stock, that is NALCO, National Aluminium. Okay, so we can see price action like this. It has touched this level 83 and sharply it is going downwards from there. If we go to the daily time frame, we can see clearly see the weak price action. I have drawn a channel as well, okay, in the pink highlighted area, and in coming days we can expect the price to show some price action like this and then start dropping. Okay, so you can keep in mind these areas. Let's see where it could stop. So I see this level 70 to 71 as a potential level, okay, of support, and the next level will be directly here 67. Okay, 67 to 66. Okay, so when the price reaches that level, you can definitely enter, okay, and accumulate a good amount of good number of shares of this stock. Okay, so that's all for this video. I have covered the three stocks which I feel are the best one for dividend. In my point of view, there are other stocks in which every factor looks good, but the pledging percentage is a lot more. That's why I have not recommended, and one of the stock is Hindustan Zinc. Okay, although you can invest, but it will not, the top recommended stock. It is still a good company because the debt is low, everything is low, just the pledging percentage is on the higher side of 87%. That's why I did not recommend, and it is not in the top 3 list. So that's all for the top 3 dividend stocks. If you like the video, please hit the like button and subscribe to Financial Impulse for more such informative videos. I will meet you in the next one. Bye. Take care.